Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This Simply Talks, and I'm live in this live session, slightly late, about half an hour late. Was trying to rectify the connections and laptop, etc. That wasn't working fine. So I'm live here in this live session, and I'm going to discuss about a very interesting topic, very important topic uh, that. Many people have asked me, many people on WhatsApp, on YouTube, on Patreon have asked me, and this is with regard to retail investors who are long term investors and who are seeing their profits uh, erode over the last 1 month or so with the way the mid cap index have fallen, as to what needs to be done. So we'll discuss in detail as to what I did during previous such falls, and there have been such falls at least in the last 10, 11 years, similar falls. So we'll discuss about that. I'll also answer your queries, and I'll also talk about the markets a little bit. Uh, so let's get things going. I hope you all are doing well. Your investments and trading are also doing well, and I hope you're able to hear me and watch me clearly. So we'll answer queries as well. So you can ask queries once I complete the discussion, or if you want my means opinion on any of the stock, you can use the super chat and super sticker feature, and I'll answer your queries straight away. So let more people join in. It's a Thursday afternoon. I know most of you would be in your offices or working from home, and will be busy at home, but in the works. But this is something extremely important because I'm not surprised. Many of the people who are in the market have come in by 2020 or 21, and they have seen the market rebound very quickly. But what has transpired is that this fall is slightly different, and I'll explain about that uh, also during this discussion as to how it is different and why this can be a prolonged journey towards wealth creation. And that's why people need to do a lot of things in order to avoid selling early after seeing such losses on their screen. So basically, you are witnessing currently are notional losses that are on your screens, and that may not be there say 6 8 months down the line. That is a complete mirror image of what took place in October. And we had a situation where everything was going up, and there were notional gains, and whoever, including me, did not book profits at the top lost that gain, either fully or partially, and eventually booked out. So the similar thing is happening, absolutely the similar thing is happening 6 months, 7 months down the line, but to an opposite extent, where everything is getting sold off. So we'll discuss in detail about that. So there'll be three part of this session. The first one about the market, the current scenario in the market. The second about this fact that what should retail investors or investors, high net worth individuals, whoever that are invested for the last 2 3 years and have seen their investments erode, what do they need to do going forward? And the third part would be for answering your queries as well. So those who will watch later on, please do like the video and subscribe to my channel and hit the bell icon so you can get my video straight away when I post it. Kindly do subscribe. I am surprised that people do not subscribe to my channel, although views are definitely coming in. So that's one thing. Anyway, so going forward, so let's discuss about the market first. As I see it currently, the market is around 15,850. It has gone to another low point for the day, and going lower. The mid cap and small cap index is also down by nearly 2% or over 2%. Uh, we are seeing some buying coming in the IT sector, some little bit of buying in some of the select pharma stocks, but overall there has been carnage across the board, and we are seeing stocks down 50, 60, 70% in the mid cap domain. And this is what I am saying, that nothing, no level is sacrosanct. It can very well go down to 15,000. It can go down to 14,800. That is a very big support, 14,800, in my opinion. From there on in, we could see some buying, but if that goes, we can very well go to even 14,000. I mean, it is very difficult to say when the bottom will be made or is the bottom made. And this is exactly where the people are making a mistake, that they are trying to dive into stocks which were bellwethers for September, October, or for 2021, thinking that they'll again bounce back and go up to 3x. So let's just jump into them, and it's a great buying opportunity into them, and that's a buy into those stocks. So these are not recommendations, but for example, into cement players, into pipe companies, into real estate companies, which did extremely well from 2020 till now, should do well as the stocks have fallen a lot. So let's go ahead and buy them. But this is exactly where this market is different, and you need to understand that every fall and every rise in the market is somewhat different from the previous one. And that is where, and that is probably the reason why not everyone who comes in the market makes money easily, and that is why making money in the stock market is not easy at all. So those people who came in 2020 had the money, and I discussed that on Sunday as well, and made 6x, 7x. They would have lost half of that. They would have lost 30% of that. So what have they achieved? 100 became 700, and that 700 has become 500. And now from 500, they can't take out that 500 because they are thinking that they are down already so much. And now what needs to be means what needs to be done here, because you don't have cash to invest. Either you sell at 500 and then buy a fresh and wait for a big move, and expecting a big move you might even fall 30% from here. So that is the dilemma in the minds of retail investors, and that is where I'm going to come in and give you an idea of a history. Because normally what happens, although the falls and rises in the market is not the same, but the reasons are quite same, and relatively the market pain or market euphoria is virtually the same. So if we go back, so let's go back in time. When was the last time we had no QE and we had rate hikes? So if anybody knows that, can you can type here and pause the video and type. Two or three rate hikes took place in 2018, between 2018 April to 2018 November. And during that period, from January, February 2018, we had a dramatic fall in the market. Now, I am in the market since December of 2011. So this year it would be 11 years for me in the market. And that was quite different from what happened in, say, something like 2013. So I'll discuss about 11 and 13 as well. And why I'll discuss that, I'll talk about that as well, why I'm talking about that. But in 2018, we had 2, 3 rate hikes in the US. And so market were jittery globally. What happened was the Nifty did well between 2018 till 2020 March. It went up by around 22%. It did extremely well over that period. So 10% CAGR. That's what the Nifty did. Nifty stocks did well, and primarily Reliance did well. So Reliance, because of the Reliance Geo theme in 2016, started to do well. Along with that, few large cap IT companies and large cap pharma companies started to do well. And so these stocks performed pretty well. These stocks performed reasonably decently. It was not that the stocks fell sharply. It was not that we had a situation where most of the large cap fell sharply. Uh, what happened was the market was pretty good in the large cap arena, but in the mid cap there was complete carnage. And so mid caps fell some 40-50%, some 30-20 to 30%, but there were some which fell 80 to 90%. I remember Lloyd Electric falling from 300, 340 to 3 rupees. There were corporate governance issues, but you understand that during very bad market situations, corporate governance issues do come up. We had the Manpasand fiasco. I was part of it. I mean, not part of the fiasco, but I was invested in Manpasand and lost 50%. So we had all those situations. What that told me was that Whenever there is rate hike and there is you have liquidity being sucked in, you have very difficult times for mid cap and small cap. At the same time, it is these mid cap and small caps that make you a lot of money. So 2018-19 were bad, 2020 everything collapsed, but by 2021 end, the levels that we saw in most of the better mid caps which survived were absolutely unbelievable compared to what it was in the peak of 2017. So in that period of 3.5 years, we saw a big up move in the uh, mid cap stocks. We saw all mid cap stocks do well, but those who were invested in 2018 and 19 in good quality companies like Astral, etc., Dixon, and so on and so forth, had to wait, had to wait 3 years to make big money. That's what the learning is. That's what I want you to emphasize upon. You cannot time the market so perfectly that somebody would have bought in on 22nd of March 2020 and sold on the 1st of October 2021. It doesn't happen like that. 99.9% people do not do that. Maybe one out of 10,000 people might do it. I don't believe all that thing. So basically you have to make money midway through it. So just to give you my example, in 2016 17, at that time I made good money trading into stocks, trading into Neil Kamal, trading into I think it was Sheila Foams, which got listed just earlier, and made money. I made a lot of money in something like Manpasand beverages. There were many companies at that point of time doing so well that we ended up making money in. There was Mahanagar Gas, Gujarat Gas, all these gas companies. There was Aurobindo Pharma, which were doing well at that point of time. But remember, all those stocks in 2016, the run that started in 2016 March and ended in 2018 January. In that period, whatever the stocks were doing well were not the same that did well between 2019 to 22. That is the second point I want to emphasize. So you cannot say, apart from few large cap good quality top companies, and we all know about those brands, apart from those brands you cannot say for sure that okay, something did really well between 16 to 18, so after the fall of 18, from 18 to 21, these companies will do well. And that is where retail investors are caught napping. That is where retail investors hold what you call that, they end up holding the babies. For example, if somebody would have uh, looked at between 2016 to 18, there were many power slash renewable companies that started to do well out of nowhere. They were doing well. I'm not talking of Suzlon, there were other companies, and they are not to be seen after that. And they did extremely well. If you caught, even if you bought in lows, they did not do anything after that. Even some of them just vanished. There were many, you can say, tile companies, Somani Ceramics, Kajaria, etc., that did well between 2016 to 18. Kajaria did not do extremely well from 2019 after the 2019-20 fall till today. Yes, it did well, it doubled, tripled, but there were many companies which became 10, 20, 30x. And then there were companies like Tanla. So I remember in 18, so I was telling, so in 18-19, I held on to Tanla, Kilpest, and Dixon. I have said that earlier as well. And later on, these were the companies that became multi-baggers, but I sold early. I have no regrets for that, that I sold some of, at least one of them early. Others I sold later. But I had to endure that pain in 2020 and then make money in 21. You cannot just buy, say, a Kilpest at 50 rupees in the fall of 2020 and hope that it will be a 700 somewhere. So I'll buy at 50, sell at 700. So I held on from 80, 90 rupees, bought at 70, held on to the fall till 50, held on to Tanla from 60, 70 rupees. It fell to 30, 40, and held on to it for whatever money I made through it. I did not held on to it a lot for 300, 400, but I did sell at good profits. So basically what I want to say here is that What do retail investors need to do here? If you have bought good quality companies and you have done thorough research, I'm not talking of mid cap, small cap, large cap, whatever you have bought. If you have not bought on hearsay, if you have not bought on anybody's tips, if you have not bought just because the charts were looking good, then, and if you have bought because these companies are fundamentally good, these companies are strong, these companies are going to perform well for at least the next 3 years in terms of numbers, then do not worry. Just hold on to the stocks, just hold on to your positions. These things will pass by, and those stocks will again come back and do extremely well. Although many of the stocks that had a rally between 2020 to 2022 may not perform, but there are sectors like export oriented sectors like chemicals, textiles, IT, pharma, they will continue to do well. Stocks may change, but they will continue to do well, and that's where fundamental analysis always helps. And that's where I believe that if you can do little bit of fundamental analysis of companies and analyze companies charts, not charts but companies numbers etc., and project it well, you can make a lot of money. You don't need to be a finance geek to make money in this market, to be a billionaire in this market. You need to just analyze how the projected business could be post this rate hikes etc. So that is where I was saying that if you're buying into infrastructure, real estate, commodity stocks, the cost of capital is only going to go up. So the struggle will only be there. I'm not saying that I'll be always right. I'm not saying that these companies will not do well, but there is a greater chance for these companies not doing well compared to debt free companies which are exporting and you can say earning in dollars, because whatever is happening with the dollar rupee is probably, in my opinion, is the prime reason for the fall. And it is like a vicious circle. The dollar is getting stronger against the rupee. FIIs do not want to buy because dollar is getting stronger, so whenever they take out money from in the Indian market, they have to convert it into dollars. They are earning less, and if FII keep taking out money from the market will fall, the dollar will become even stronger, and the rupee will become even weaker. And this vicious circle will continue until the rate cycle trend at least arrest. So we have to understand that next 2 quarters could be extremely difficult, could be very tumultuous. And for that, if you have bought into even consumer companies which are debt free and they are getting bettered, for example, a DMart at 3,000, I'm just giving you an example. Uh, you cannot sell DMart at 3,000, but you have to buy DMart at 3,000. You have to buy it at 2,500. I don't know where it will head. It may head towards 2,500. That doesn't mean a DMart at 2,500 will remain there for the next 3 years. For the next 6 months, yes, this market could really test you. This market will make you cry. The situation has not got to that level, but it will get to that level. So what could happen is that the market may remain range bound. These stocks like DMart, Dixon, etc., and many consumer centric stocks may remain there because the cost of capital will go up. People do not have money in their pockets and everything is getting expensive. The earnings will dip for these companies, and that is where will the earnings grow? Earnings will grow where people are buying, or people are exporting, companies are exporting. And that is where I'm saying that if you have to make money, that is where probably the money will be made. Because now I come to my second point, or the third point probably. 2013 to 2010, 2010 November, not many people talk about it, but between 2009 March to 2010 November, in those 18 months, market went from 2000 to 6200 again. There was a 3x rally in the market, and there was a rally because oil went to $140 per barrel. So what I want to say here is that oil marketing, oil companies like ONGC etc. did extremely well. Aban offshore, this that. But from 2010 November to 2013 August, what was the scenario? Let me know. So if anybody knows, Do type here if anybody was invested during that period. Till then, I'll just answer this query. Sachin, thanks for your contribution. Sequent 120, Nika 1290 is back to lows. Fundamentals look good, same, but the pain in these stocks is going ongoing. Yes, exactly. So Sequent can go to 100, Sequent can go to 90. What I'm trying to say here is that Nika could go to 1000, but is the business going to suffer for the next 3 years? For the next 6 months, the business is going to suffer, and I believe Sequent at 120, Nika at 1200, things are priced in. So you could see a situation where numbers are bad, but the stocks may not fall. But what you need to analyze is whether for the next 3 4 years these companies are not going to perform at all. If that is the case, you believe that you need to exit. Sequent is one stock in which I am invested, so that's a disclaimer. I believe that these are very, very attractive levels, and I believe that numbers are set to only improve because they are exporters. Second thing is that the numbers have started improving from the December quarter for Sequent. Similarly, for Nika, I think numbers are set to improve from the Diwali quarter. So probably next 6 months could be difficult. The stock may go to 1000. I'm not ruling that out. But again, over a 3 year period, Nika should be beyond 2500. Sequence should be beyond 500. I think there could be a huge rally in all fundamentally strong companies, but not in the next 6 months. In the next, especially in the next 1 month or so, with the kind of market we are in and the kind of geopolitical situation, anything is possible. We could see 14,000, 14,500. We could see 18,000 also. I'm not ruling that out. I mean, in the next 1 month, we could see 17,300, 400 as well. So we could see a 1500 point rally on the upside or a 1500 point rally on the downside. And that is where I'm saying that during 2010 to 2013, what happened was market went into a slumber, partly because of the policy paralysis of the government, and also because of the fact that there were rate hikes all across the globe. Markets were coming out of a very difficult scenario. There were no QE, there was no you can say money printing going on. From 2013 onwards, US started printing money big time. So during that 2.5 year period, there were only two sectors that did well. One was IT, the other was pharma, and it was because of the fact that between 2010, or yes, around 2010 January till 2013 14, till 14, the dollar became so strong from around 35, 36 rupees. I remember in 2010 when I was in US, around 40 rupees or so, 38, 40 rupees, all the way it went to 56, 57 rupees. So dollar uh, became 40% stronger during that period, and everything related to pharma and IT went up. Everything related to other things went down. The market went down. Eventually, the market fell only about 12, 13% Nifty, but the mid cap and small cap index were completely beaten out of shape. I remember small cap index to be around 6,000 or 7,000. So if anybody can go back and see in 2013 August where the small cap index was, you will be able to find out. So I am slightly having a feeling of a similar kind at the moment. I'm not saying the same thing may happen. I'm not saying that we are headed towards 7,000 on the small cap index and this and that. What I'm trying to tell you is that there could be specific export oriented sectors that could do well and nothing else works. So you might buy a DMart at 3,300 and might stay at 3,300 for say 2 years. Again, more than 3 years, it might go back to 6,000. So that is what my belief is, and that is where so what retail investors need to do. If you are invested into top quality companies and they are down and you are down 20%, I am down 20%. If even if you're down 30% on your portfolio or less, you should just hold on and probably wait for a time where your prices come in, you make profits, and whatever prices you thought that the stocks may go to because you would have done fundamental analysis, then wait for your prices would come in. All right. So that is my point. I'm ready to answer your queries. Kindly use the super chat and super sticker feature, and do let me know in the comment box, or those Patreon members who are watching this feed, as to which other topic you would like to have a live session on. I'll discuss that topic on Sunday. All right. So both Birlasoft and MTAR, Manjunath, is very attractive. They can go down 10-15% from here, especially Birlasoft at these levels look very attractive. MTAR Tech, we had anchor investors sell at 2000 Since then, it has been relentlessly falling, and now at 1500 odd or less than that. They are both attractive, but you should have minimum 3-year time frame. So FL buying levels are current. I think between 1000 to 1050, you can buy around 980 as well. But if you are a trader, then wait for 1100 to be taken out to buy into. If you want to trade short term, below that it is weak at the moment. Sajjan, thanks for your contribution. Uh, did you watch KGF 2 and PVR for 3 years? Okay, so what did I do? Very interesting. So basically, what I did was I have a very good friend of mine just nearby, and we both invest together. So we kept on meeting every 3-4 days and having coffee and everything else. And I'm a big cricket buff, sports buff. So I watched virtually all kind of sports from Commonwealth Games of 2018 till the World Cup of 2019. And if you watch my YouTube videos of that time, I kept on talking about cricket matches as well, the World Cup matches and so on and so forth. I have stopped talking about it, but a huge sports buff I am. So I kept on doing that, and now I'm planning to do the same. From May 15th, there is so I don't watch IPL. I don't like franchisee cricket. I'm more into sports. I would love watching a Bangladesh Sri Lanka series that begins on the 15th of May. And then later on, we have the Asia Cup qualifiers for football. We have a lot of events coming up from May onwards, the Commonwealth Games and so on and so forth. The Asian Games has been postponed, but we have the England India series, and I can just keep talking about it. So, not on a lighter note, this is a serious thing. So, what you need to do is distract yourself from the market. If you are invested into top quality companies, leave your investments. They will come back. Market will come back. It's not heading to zero. Everything will come back. Whether liquidity will come or not, if your stocks keep on compounding profit growth of 20-25%, they will move up. They are not going to relentlessly go down. Remember one thing, that today, how much is the mid cap index down? So the mid cap index is down 700 points today. Mid cap index is around 26,700. So if it goes down for 700 points for the next, say, 30 days, I think 30-40 days, 30 to 40 days, it will be zero. So it cannot be like that. A Nifty is down 350 points, say Nifty down 400 points every day, and it goes down for 40 days, it will be zero. So you cannot have markets going down in the similar vein every time, and that is where the panic set in. So whenever you find yourself in such panicky situation, or where you are down 30%, seems like doomsday. Understand that markets, if they fall in the same way, they will be zero within 2 months, and it cannot be possible. So the reversal will happen, plus results of companies will start coming in, and if the results are good, the valuations are becoming cheaper. So a DMart at 100 times at the moment, or 110 times, 3 years down the line, I think their EPS is around 25-26 rupees, something like that. If 3 years down the line, I think their EPS should be closer to 50 rupees. It will become 60 times. So it cannot be like that. It will again trade at 100 times. Remember, stocks always trade at their relative PE. It never happens unless there is corporate governance issue, that stocks would go down because the PE shrinks, unless there is corporate governance issue or they are commodity stocks. And that's why I stay away from commodity stocks. Consumer centric stock, whether in chemicals, whether in plywood, whether in home improvement, whether in pure consumer, FMCG, whatever you take it, whether in pharma or IT. There are consumer centric stocks in IT and pharma as well. Those companies will trade at a premium and will keep on trading at a premium, and their higher end of those premiums will again come in a bull market. So I kept on watching sports. I'll keep on watching again sports again. Just I'm waiting for the IPL to end because I don't watch franchisee cricket at all, and so I'll be more busy doing that rather than worrying about the markets or the fall that is happening in the market. Right. Tata Motors is an avoid. I think autos for the time being for the next 6 months are an avoid. Although I have always been positive on auto and said that I can stick my neck out and say that 2022 will be a big year for autos. But with the kind of external environment we are seeing, I think another 6 months are gone for most of the auto stocks. See LTI because of this merger thing. Yes, you can buy again if you have 2 to 3 year view. All IT companies are very attractive, whether large cap, mid cap, small cap. Whenever a rally comes into IT, I think the way IT index has fallen 24, 25% from the top, it is unprecedented. During the pandemic, the IT index fell 32%. I think that this is the second biggest fall in the recent time. So I am very positive on IT. Very good stock SBI cards again for long term. It's a portfolio stock. Keep on holding if you don't have add on to these positions. Again, Bajaj Finance is a buy at 5,500. I don't know where it will arrest 5,000, 4,500, 4,000. Remember Bajaj Finance being at 2,500 and everybody writing obituaries about it because of the pandemic and because of everything shutting down. That these loan companies and everything will go to zero. From 2,500 it went to 8,000. So we don't know the bottom. These are very good levels to buy these companies. These are very good levels to buy stocks. Yes, you can fall on the index 10%, on the Nifty 10% from here, but I don't see more than 10% fall. To be frank, if you ask me where is the bottom, I feel around 14,000. I don't think 14,000 can be broken unless there is some really bad news. So what I'm trying to say is that we are very close to a bottom. I won't say we are at a bottom or something. We are very close to a bottom, but the reversal may just take place in two or three industries or sectors for the time being. PI Industries is a buy at these levels. So I remember PI going from 2,200 to 3,000, 3,200. It has again come back. These companies will again perform by July, August. I believe during the monsoon season, numbers should be good. So I think for short term, agri-oriented chemical companies, agrochemical companies could end up doing very well. Kilpest, I believe at 330 is a buy. Again, I'm very bullish about it. Disclaimer, I'm invested in the stock. I still feel it has a lot of potential and the company is doing a lot of things. There is a move towards the NCLT for its listing, etc. That is going on, and for 3P Black Bio listing. So, a lot of things are in the pipeline, should do well. Banks should do well from here. I believe there could be some fall left, but HDFC Bank, Kotak, ICICI, they are good. But I'm more oriented towards stocks which are probably into the consumer domain. All right, guys. Thank you. Thanks a lot for being online. Please like and subscribe my channel. Hit the bell icon so you get the video straight away when I post it. And kindly do support me on Patreon. Thank you.